After 5 frustrating years, some analysts believe the economy is ready to burst out. But are the green shoots seen towards the end of 2013 really sustainable, or will the January blues sink in? I'm Monica Gibson, and I'm joined down the line by Berenberg Bank's Dr. Holger Schmieding for the weekly wrap-up. Holger, the new year provides a fresh start for investors, but as the first trading week comes to a close after the festive break, how would you describe market sentiment at present?
After the very strong gains seen late last year, markets are in consolidation mood. Investors are looking for fresh signs that the economies are getting better. In the absence of fresh signs, we will probably move sideways with a little correction until we get further strong economic data.
A report from the US Labour Department showed initial claims for state unemployment benefits slipped 2,000 to a seasonally adjusted 339,000 last week. Though claims continue to be plagued by seasonal volatility, economists said last week's decline was consistent with an improvement in labour market conditions and was in line with other indicators showing an acceleration in job growth. First of all, do you agree, Holger? And what should market participants hope from next week's readings?
I very much agree with the assessment. The US data do show that the labour market is strengthening on trend. There's always some volatility in the data, but the underlying momentum is very much intact. We do expect that on Friday, the 10th of January, we will get a fairly strong U.S. labor market report with probably around 200,000 as a gain in non-farm payrolls, continuing the trend of the last few months of last year. All in all, the U.S. labor market looks solid.
Indeed, next week's calendar looks pretty busy with the first BOE, ECB and NFP matrix of 2014 and since the Fed's surprise tapering last month. In terms of the bloc, some analysts believe the single biggest task for the European Central Bank in 2014 will be the implementation of the banking union. Now, while this might be a way off, do you think this will set the tone for the year?
Banking union is, of course, a very big issue for markets. It's a very, very big task for the European Central Bank. But that will be a longer-term task. I think near-term investors are looking more to signs whether or not the ECB might ease policy, its rates or its non-standard instruments, again in 2014. On that, we expect little news from the European Central Bank at its January session. While inflation is very low, the gradual uptick in leading economic indicators suggests for the time being that the ECB does not need to do more to stimulate the business cycle.
The pound gained 6% in the past year, the third best performer among 10 developed nation currencies. As a strengthening economy boosted speculation, the Bank of England will need to raise interest rates sooner than it forecast. When do you foresee this happening, and subsequently, how do you see the pound against the US dollar performing through the first quarter of the year?
The British economy has responded quite nicely to the monetary stimulus provided by the Bank of England. Growth at the moment seems to be running at rates around 3%. The Bank of England will probably not be able to maintain rates at the current extremely low levels for an extended period of time. We do look for the first Bank of England rate hike in early 2015. The Bank of England will want to let growth run for as long as it can without raising rates, but with growth being strong, the Bank of England probably will have to react in a good year's time and not in late 2015 or early 2016, as many at the Bank of England currently seem to still believe. Well, we have already seen a significant strengthening of the pound. We do not expect much more of an up move over the course of 2014, and that is because other central banks, the Fed, the European Central Bank, will also be seeing fairly strong growth, or at least less weakish growth than they were expecting, and as a result we think markets will bring forward the expectations for interest rate hikes for all major economies, leaving the balance of currencies largely unchanged.
Holger, thank you so much for your time and perspective today. Well, viewers, that's all from me at the moment, but click back to the website for more currency forecasts with my colleague Natalie McDonald in today's Targets in Focus. Have a good weekend.